Hi, my name's Frank Valentic, Director and Buyers and Vendors Advocate at Advantage Property Consulting. Well, today's part 2 of my investing tips series. I'm often asked, what sort of tips do you have for investors? What sort of mistakes do you see investors making? So these are some of the tips that I give my investors and follow myself. So first one is really time in the market is more important than timing the market. A lot of people try and pick the lows and the highs in the property market. Experts like ourselves that are in it every day can't pick that the market was going to turn off this year when coronavirus hit in late March, or that it was going to turn on last year after the election. So it's very, very hard to pick the market ups and downs. Another great way to build your portfolio is to try and manufacture more equity, and that's through areas like subdivision. You can subdivide and get permits and sell a property with added value with the permits for someone else to go ahead and start their own project, or you can take it to the more advanced level and you can get permits and then do an actual development yourself. You might put another unit on the back of a property, or you might start from scratch and create a 3 or 4 townhouse development. So that can be a great way to add value. Other tips are to try and buy property that is owner-occupied type stock. It's not investor stock. So it's not those small 2-bedroom shoebox apartments that you see in the docklands that are 50 square metres in size, that don't have any outdoor area, that some don't have parking. But it's about buying those properties that owner-occupiers will buy, because one day you're going to sell this property, and one day you're going to want to reap the benefits of your smart investment decisions if you bought the right property in the right area. I often see investors make mistakes when they're buying apartments. They buy the wrong apartments, and they buy apartments that don't have any land value, that don't have any courtyards, that are just basically apartments with airspace, and airspace doesn't go up in value, it's the land value. Also, they buy apartments with restrictions, so they might be stratum title or company share, or they might be studio apartments or service apartments, and these properties are very hard to finance, and therefore if you struggle to get finance for them, then the end buyer, when you're trying to sell them, will also struggle. One really important tip is to buy properties that the banks like. Banks like period style properties, banks like properties in blue chip areas. They typically don't like regional properties, country areas. They often make it harder when you're buying commercial properties because of the higher vacancy rates. They want higher deposits and LVRs. So there's some of the things there to ensure that the property you are buying is one that the banks like. If the banks don't like it, most people are needing to get a loan and not buying with cash, so you will potentially struggle. One of the biggest mistakes I see is when buyers buy apartments in a shopping strip area, and those areas are typically business zones or commercial zones, and therefore the finance requirements require larger deposits, and some buyers obviously struggle to get finance and then struggle to resell these properties. These are some of my Investor 101 tips about buying the right property and buying a property that it's going to have really good resale value. I'm always thinking of the end game at the start rather than when you're selling in 5 years or 10 years time. We've seen some properties, some modern apartments that our clients have bought on their own in even areas like Elwood and Sunshine that have had no capital growth in the last 8 years. So some of these mistakes we're seeing because investors aren't following these 101 principles. Please don't hesitate to get on our website, check out information about our Buyers Advocate, Sellers Advocate, Property Management, and our group block purchases, as well as subscribe to our free weekly and monthly market updates. We'll see you next time.